What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is March 31st of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to do what may very well be one of my biggest warning videos I've done in a long period of time. I really want to step back and try to provide scope for where we are when it comes to Bitcoin, altcoins, and the stock market, because when I look at the numbers and when I look at the situation that we're in right now, whether that be what's going on in the crypto space, but I think what's even more concerning is what's going on in the broader global stage, things are not looking good for risk on assets. And at the end of the day, while a lot of people will tell you that Bitcoin is this alternative hedge to go to when times are tough, it is best performing when times are good. So if we're shifting into a period of time where things are not going to be good and not favorable for risk on activities, this is going to put a big damper on the performance of crypto. So if you can stick with me here today, I think this video will prove valuable for you guys. Grab a cup of coffee. If you enjoyed the video, consider dropping a like, and let's go ahead and kick things off. So I want to spend some time here to talk about why I'm so concerned about the state of the market. Beyond the fact that we've already been here on a solid downtrend, almost correcting nearly $30,000 from the relative highs, we can see here we're spending much more time below the 200-day, which has effectively acted as resistance here for the past couple of weeks. This already is a worrying sign here in regards to price. And we can also see here on the daily as well that we failed to hold on that attempt to get above the 21-day and the 200-day, not even testing the 100-day moving average. Again, showing further change of character here that we are likely heading lower in terms of price, that there are no significant bid side buyers here at the current moment. But outside of this as well, I really want to get to the big picture here beyond the price action, because price action can look scary in the short term and sometimes things change, right? But what really matters here is the big picture. The biggest things that have played an elemental role in driving Bitcoin to where it is, taking Bitcoin from where it was at the initial launch of the ETF, around the kind of $35,000 to $40,000 range, all the way up to $110,000, were two key things: Bitcoin inflows, MicroStrategy, and along with that as well, I think many people were hoping as a third topic, the government potentially buying Bitcoin for a Bitcoin strategic reserve. We're going to talk about all three of these because at the end of the day, they are where not only people's focus is, but outside of that, these are really the three things that can effectively continue pushing Bitcoin higher. So we need to continue reviewing these consistently, and we need to see how they're currently playing out or how they're playing out over time. Well, the ETF has now been live here for over a year and 2 months now, more than a year, 2 months, coming up here in a year and 3 months. And while obviously the ETFs have played a significant pivotal role and practically doubled in size from the era and days of GBTC, which was an exchange traded note, so we went from around 600,000 Bitcoin at that time all the way here towards around 1,126,000. Now, the big thing I want to talk about here is that we should be seeing consistent inflows in the ETFs, because this is the ultimate narrative. This is the floodgates opening for Wall Street to be able to buy Bitcoin. That's at least what we've been told. Well, essentially for the last 3 months, this entire first quarter, we have seen practically no new additions in Bitcoin. Less than 1,000 added Bitcoin at the time of recording. In the last 3 months. Not to mention, it's important to note that we had a 50K inflow here, and over the last 2 months, we have basically cut that back entirely. So in 2 months, we've seen a net reduction nearly of 50,000 Bitcoin, a major outflow here in this case in the ETFs. Now, it's okay to have a neutral month. It's okay to even have a slightly negative month, but to basically have no progress over the last 3 months tells me that we're hitting a wall here. We're hitting enough saturation and exposure for Wall Street's appetite, at least with current macro sentiment, which we're going to get into later. So we have to look for the next item. We have to look at MicroStrategy. And this is where things get really concerning, because MicroStrategy, whenever it will be able to issue convertible notes to people in bond markets who are willing to credit MicroStrategy to essentially take these IOUs and take the risk of MicroStrategy's stock price in order to hopefully make outsized returns, right? We saw very clearly that that allowed them to do what they do best, which is just automatically buy Bitcoin. That's their whole goal. If someone issues these convertible notes, they're going to take that credit or that capital and go ahead and try to buy Bitcoin as quickly as possible. that had not only started slowing down here throughout the first part of quarter one, but throughout the later part of February here into March for the last month, we've seen only a net addition of 7,000 Bitcoin into MicroStrategy's holdings. Okay, this is less than a one. This is roughly around a 1 to 2% acceleration here from its existing position. You can just tell by the momentum here, the difference, what we saw back here in November to December versus what we're seeing now. It is basically flatlining here. And now MicroStrategy, which has this over 500,000 Bitcoin position, a massive chunk of the supply, is now in a position here where essentially they are up only 22.8% on their Bitcoin position. MicroStrategy has accumulated so much here. They have spent so much money over the last couple of months in what very well may be the distribution range for Bitcoin's price, so much so that even though they have a $7.7 billion profit, hey, I'm not badgering Michael Saylor here and stuff, right? I think overall the Bitcoin treasury narrative could possibly be there. I think Bitcoin maybe could still go up over the long term. However, they are net overall in such a heavy position that they are only up 22%. So essentially, if we see a reduction down here to their average price, which is sitting somewhere between the upper $60,000 and $70,000 range, then this means MicroStrategy will be at break even. And anything below that starts to put them in a position where they're down on their money. Now, at the end of the day, MicroStrategy can be in the red. Bitcoin could go to $50,000 or $40,000. And it doesn't mean MicroStrategy is totally done for, but it is a telling sign here that MicroStrategy, which has claimed that they're never going to sell their Bitcoin, that they're never going to do anything that would go against their long-term thesis, if even a fraction of that comes into question here, that they might start selling or de-risking, considering the convertible notes that they're going to own the next couple of years to de-risk, that is going to cause substantial sell-side pressure on Bitcoin. And irrespective, even if we don't talk about that doomsday scenario here, right? Let's not talk about MicroStrategy getting liquidated. Let's not talk about MicroStrategy having to, essentially assess its options and make the hard decision and maybe backtrack on some of their positions. Putting all that aside here, what it does show here is that Bitcoin purchases are slowing, that those convertible notes that they were able to issue at such a large premium on the share price are no longer happening. So this is a huge spigot of buy-side demand for Bitcoin, where capital is just flowing into Bitcoin that is no longer able to come in and provide that same level of support. And if we go beyond these two things, we know now that the federal government, with the crypto summit that was hosted by the current administration, basically came forward and stated that they will not be using taxpayer dollars or borrowed capital to go out and buy Bitcoin and increase its reserve from the already 200-something thousand that they already own, around 1% of the supply, and instead will only do budget-neutral acquisition strategies to go out and buy Bitcoin. So maybe the selling of government property or assets. So this is not going to move the needle by any serious measure. It's great that they're holding the Bitcoin they have. That's definitely a positive sign that the government's not going to dump 1% of the entire Bitcoin supply. I think that's in the better interest of the U.S. to hold it. But we know now that that's not going to be a buyer of last resort. So we have run through our three biggest options here. I really want to put that in perspective, how exhausted we are at this point. The corporate treasury narrative has not gone far beyond MicroStrategy. Amazon, Microsoft were, basically there were some shareholders who had proposed exploring this. Shareholders overwhelmingly voted against allocating their balance sheet to buy Bitcoin. We are seeing very clearly here that no matter which ETF you're looking at, it's not just grayscale outflows, but we are seeing the broader picture that there are even outflows in the big ETFs. And we are seeing that the US government, nor the Chinese government, nor European governments, or other major governments across the world are looking to buy Bitcoin, other than El Salvador and a couple other smaller, different states across the world. So we come here to taking a look at altcoins. And altcoins are, again, another risk-off sentiment gauge right now that I'm seeing across the board. Imagine for a moment, all right, I want you guys to consider this yellow line here I have in the chart that's just slowly creeping up over time. This is the 100-month moving average. This means it's taking the value of the last 100 months that we have in regards to price action. We're talking about years upon years here of data that we're working with. And this moving average, what we're looking at here, it's a part of the others dominance measure, others.d. This is the market share of altcoins as a percentage of dominance. Imagine if I told you that this measures everything beyond the top 10 coins in crypto, meaning that the endless amount of altcoins that are created, the endless amount of meme coins, the endless amount of layer 1, layer 2 protocols, all the things you can think about in crypto, they're basketed into this. And there's new coins being made every single day, 24/7, nonstop. New narratives being crafted, new things that are encouraging you to go out and essentially buy them, right? And we, after this major drawdown since back in December of 2023, all the way back here from January 2022, we have set lower highs in regards to others' dominance. And along with that as well, we can't even find support or hold temporarily above the 100-month moving average. We are at the same level here for others' dominance we were back in June of 2023. Right? This is the same level we had relative short-term resistance at in April of 2019. And it's lower than where we were back in 2017. And now it's looking like, I think we're just being honest with ourselves here. There has been multiple weeks at this range. No buyers are coming in. This looks to me like we're going down to a much lower capitulative range before we're going to find a bottom in altcoins. And if you just take a look across the board at all the different plays, our narrative has really been simple, guys, that we just wait until we can reclaim the 21-day moving average. There's no need to apply dozens upon dozens of indicators here. And what we see is that Ethereum, yet again, on its BTC ratio, ETH to BTC, still we just can't get above the 21-day, and then we roll over to new lows. We're down over 75%, and no one seems to be coming and buying in any significant way. We can see XRP. I know a lot of people would say, well, XRP is one of the exceptions. Should I go long XRP, Nick? And I've said this again, time and time again, we're above the 100 month. This is the typical, like the 200 week and 100 month for the last couple of years has switched from being the accumulation range to the resistance range. This is where distribution happens. This is just textbook distribution here, guys, in my opinion. All right. I'm not here to be too negative or anything like that. I think this is happening across a lot of cryptos. It's not just me badgering XRP, but you tend to find that XRP makes these exacerbated moves, and it's just distribution for the next couple years, where they easily just, you buy XRP, and they're just slowly unloading it onto you and stuff. And you have Brad Garlinghouse and all the likes of people going and saying, oh, the U.S. government's going to be buying XRP. The U.S. government's going to be buying XRP. Sure. Go ahead and put your retirement savings and keep buying XRP. Just really like things that are pushing it to the limit, in my opinion, for what's tolerable. Solana, again, we could talk about fundamentals here about Ethereum, XRP, Solana. Not much going on Solana other than Pump.Fun, which is itself seen much weaker volume over the last couple of months, just pure meme coins and scams. After this huge pullback since back in November, right, and an ability to make new highs here in January, coming down here over 50% from the prior highs of the past back here in March of 2024, a year later, and we are struggling to hold above the 21-day after a 50% correction. What does that tell you about sentiment in the market? It tells me that there is no more buyers and that this has got to go a lot lower before we are going to get new buyers into the market. This is, I couldn't tell you guys, a break below the 200-week resistance at the 21-day consistently, lower highs here. This looks to me like a descending triangle. This is incredibly bearish here in regards to price. This means we've probably got another major flush to go down before people are going to come in and buy in any meaningful way. And it just kind of makes sense here because obviously crypto, from a fundamentals perspective, I think if we're being honest with ourselves and we're not just saying, scalability is getting better, or there's this new techno gadget or protocol that can do XYZ that we couldn't do before. The actual applications, the actual use cases, new participants coming into the market and actually using crypto in exciting ways to make generational wealth or create new value. Guys, we've been around since 2017. I'm not seeing shit out there. And I'm sorry for my language, but this is your money that's on the line. This is your capital. And there are a lot of people who are telling you to be passive and do the same thing that they thought, worked for the last 10 years. But I want to bring your guys' attention to something that they may not be talking about. And that's not just what's going on in crypto, which I think already looks quite lackluster from a fundamentals perspective. I think the music has stopped. I think people don't believe in it right now. But beyond that as well, I think we got to get down to the reality here, which is what's going on in stocks. Because if you don't track what's going on in the stock market, if you aren't keeping up with the macro perspective and you aren't zooming out to the long-term charts, you are going to miss the big picture, and you could get caught red-handed. You could get caught with your pants down, where the market is going to take away not only the money that you've probably already worked hard for if you just started investing, but outside of that as well, the money and generational wealth you've possibly built up being in crypto all these years. If you're dogmatic about those principles of just constantly hodling Bitcoin, constantly seeking out the next multiple opportunity, and just buying blindly into the market, you may get caught in a position where you lose a ton of your wealth, if not everything. I want to go ahead and point your attention here to what's going on in the S&P 500 because it is eerily similar to what we were seeing with Bitcoin. Back in December, in January, we were establishing new all-time highs in the S&P 500, right under about 6,200 points here. And essentially, since back here in late February, when we broke through the 21-day, we broke through the 100-day, we not only went straight through the 200-day, but it's very clear now that we had multiple trading days where not only the 200-day, but the 21-day, the green and yellow line as well as the blue lines here have acted as resistance. And we got another major flush out last Friday. The futures market is pointing again to another decline here of about 0.5 to 0.7% in the major indices, the S&P 500 and the NASDAQ respectively. And if we roll back over down to those prior lows, chances are we have got a long ways down to go. At a minimum, I would say another 10% to 15% correction. Somewhere down here to this 200-week moving average is probably, at a minimum, the kind of long-term target here for the next couple months. It won't happen in probably a straight line. It won't happen. It doesn't have to happen through a flash crash. There will be some bounces along the way. But my point here is that we are entering in a broader macro downtrend, and we could potentially be going down to price levels we haven't seen by that time in about a year and a half, or maybe even worse here if this is the beginning of something much bigger. And I want to again bring this chart to your attention. I know I've, quote unquote, I've been like a dead horse and stuff at this point. I know you guys are probably tired of me bringing it up, but the 95-year-long channel that we have been in the S&P 500, that again is made up of the most exacerbated periods in market history and the least euphoric here. The collapse of 2008, the stagnation here in the lost decade here, the 70s and the early 80s, and here in the 1930s at the bottom of the bear market from the roaring 20s and the Great Depression. So I just want you guys to keep this in mind here, because when we look at this chart, this is not just something that matters if you're looking to buy stocks. This matters if you own property. This matters if you own stocks. This matters if you own crypto, whether that be Bitcoin and especially altcoins, which are on the absolute tail end of the risk spectrum, right? When we're talking about all different types of assets. We are at a period of time where assets are trading at a massive premium here. And we are starting to see the signs that across the board, the market is getting a little bit worried about the valuation premium it's paying for these assets, and are coming to terms with the reality that with the changing macro conditions, with things in the new administration like the upcoming tariffs that are out there, as well as deficit spending reduction, and along with that as well, a ton of different factors that many people may not be accounting for, that we covered in this month's newsletter that we're going to be dropping next in the next couple of days here, where I'm going to be doing a full report on this topic. With all of that coming into play, we've got a scenario where if we sometime in the next couple of years come down here to the lower line of support, we could be looking at a substantial bear market over the next couple of years, what I effectively call a lost decade. And just take a look here at some of the different plays here across the board. We first have NVDA. NVIDIA is down from around $154 a share down here to $109. And the price just tells me, considering the 200-day was failed support and turned into resistance, no one's interested in buying here. There are much more sellers than buyers, and this looks very set up here to come down here to the 200-week moving average, which we're talking about from those prior highs cutting back upwards of $1.5 to $2 trillion in market valuation for NVIDIA. That's pretty substantial. And, why are we seeing this here? Well, I think, to be honest, AI has hit a little bit of a peak, at least in terms of the GPU requirements that are going to be needed to service existing AI demand and the existing use cases that have come out. And while obviously the tech is only going to get better over time, the time horizon for AGI, something that would be comparable to a human and go beyond human intelligence, we are still far away from that. You can see here, even in the more kind of relevant statistics since back in November and October, we basically kind of flatlined in the amount of monthly ChatGPT website visits. So again, there's definitely a use case here. People are using it. ChatGPT is a revenue generating product. It's definitely built some kind of market share. There are also other different plays out there and other tools, but we've gotten to a point, especially I think with DeepSeek, that really shook up the perspective of how much computational resources are going to be required, not to mention the moat that NVIDIA and other US-based companies have on the chip making market. That is going to diminish quite dramatically. Another thing as well is Apple. Apple as well, being the largest company in the world, we have to track what Apple does. It's even bigger than NVIDIA in terms of market capitalization. And so far, the price action is showing the exact same thing. An attempt to make the 200-day support, lower high, break through the 200-day, 200-day acting as resistance, 21-day acting as resistance, pointing straight for that 200-week, if not worse. And this is coming at a time where, for example, a lot of great people like Marcus Brownlee, who does a lot of pro-Apple content, generally talking about Apple successes. He's usually the one who gets to interview Tim Cook and a lot of other people from the Apple team on breaking innovations. Funny how I just jumped to Tim Cook there as I switched my slide. The main point I wanted to say is that Apple essentially has completely fallen behind in the race for AI, which is already getting to a point of saturation. So if we've seen this big valuation premium add into Apple as a company, probably easily about $500 billion to $1 trillion off of this recovery we've seen since the last bear market in 2022. And AI is not really going to materialize any value for Apple in any significant way, considering that their earnings profile, if we look over the last couple years, has basically been unchanged. If we look on an annualized basis, in fact, their margins are getting a little bit tighter. We're seeing here that generally the company has not made any substantial growth in revenue or its net earnings. And the company is trading at a 35 PE multiple. Nothing has to change. Apple can be exactly as it is today. And if its PE multiple drops to 20 or 25, this is going to mean considerable decline in its price and considerable equity value contraction across the board in the markets. And you see this with all the other stocks. You see it with Microsoft, which has not set a new high since back in July of 2024 and has been well below its 200-day for a long time, continuously facing resistance at the 21-day. You see it with Google, right, which had this big move up here on earnings, has essentially continued to decline ever since here, cutting back nearly 25% of its value in a very short window of time. Amazon, very similar story here. Failure to hold on the 200-day, now trending back down here, looking like it's heading for the 200-week. We can see here with Meta as well, down from 740 to 576. We can see for Berkshire Hathaway, on the other hand, this is the kind of last thing I want to talk about here. When we go to probably I guess he's essentially defined as the Oracle of Omaha, Berkshire as a company, the company founded by Warren Buffett, has essentially been building a cash pile. It is one of the few stocks that is actually trending higher here in the market. It is completely moving counteractive to the indices across the board in the market. In fact, Berkshire Hathaway as a company is up over 22% when compared to the S&P 500. So it's not only up in net terms, but it is having a clear differential move here versus the broader market. And we can see that this usually happens, these kind of exponential moves here in Berkshire Hathaway usually happen during environments where markets are starting to enter into that peak capitulation, that peak fear over the next couple of months, where there could be a recession, there could be a serious downturn in the performance of equities, as Berkshire Hathaway is a more defensive play. So the main point here I want to say is that while I'm not here to be all doom and gloom, it means that we are in the midst of this corrective phase, one in which I think is going to continue playing out over the next couple of months and is going to catch a lot of people on the, basically off guard over the next couple of months in terms of where things are actually going. Berkshire Hathaway has this massive cash pile. $334 billion. They liquidated a ton of their Apple position, nearly doubling their cash pile in a very short window of time. And we're still seeing, if we take a look at Apple's share price, no serious buyers coming in here, right? We just had a year of distribution following Berkshire Hathaway making that reduction. Now, this obviously makes sense if we just zoom out, because obviously we are not only at the top of the 95-year-long channel, in line with the dot-com bubble, in line with the roaring 20s, just to really get context for how ridiculous assets are trading at right now, the kind of premium they're trading at. But another one is looking at the stock market versus GDP. This is the Buffett indicator. This is one of many different models and different measures we track within the Dash report here on the DataDash channel and our newsletter that we do. You can see here that this was back in December, right? So this is when the market was really kind of getting close to establishing its relative peak. It climbed even a little bit higher here going into January. But my main point here is that it was trading at a 211% ratio. So the market is being valued at over 3 times what the valuation of annual GDP is. This is higher than the second standard deviation here from the historic trend line. This is higher than the dot-com bubble. It is higher here than in the 70s. And it's even higher than where we were back here in COVID. Now, I'm not here to say that markets can't remain irrational. In fact, they usually can remain irrational longer than most people trying to short it can stay solvent. I'm not here to tell you to short the market, guys. I'm here to tell you to probably de-risk, to make sure that you've got some cash on side, that you're not so dogmatic about following the perma bulls out there who will tell you to just buy Bitcoin, accumulate. Don't listen to Michael Saylor, who obviously has a huge vested interest in Bitcoin and can afford to be wrong. Instead of someone maybe like yourself who's a hardworking individual, who's worked hard for your money, who may have a family you need to take care of, a future you need to prepare for, a mortgage you might have to pay. I'm here to try to be as realistic as I can with you guys and not try to live in this la-la land that some people are, because they have the afforded privilege to be able to essentially be wrong on the market and see their net worth go down 30-50% over the next year or two. This to me is a very important thing, guys, that I think most people don't keep in mind. They're so caught up usually in the micro perspective of what's going on in crypto, but they don't look at the macro perspective. They don't look at the liquidity flows. They're not looking at the valuation premium that people are trading. And while obviously at the end of the day, I don't care so much about the fundamentals per se, I do care about direction in regards to price. And if we're just saying, to just kind of keep it blunt and simple and look at price, I mean, there's not much over the last couple months that's left me really excited. The thing that leaves me excited is when we're trending above the 21-day, because that's when all the price appreciation comes in. Otherwise, if this is playing out similar to what it was back in 2024 in regards to Bitcoin, we've got multiple months of stagnation of lower highs and lower lows. And it's going to be a generally uninteresting time for Bitcoin, let alone altcoins. And the same note for stocks here. Right, if people are not buying on the market here on this discount, if we can't even hold in the 21-day, I'm not really interested until we get down to those long-term moving averages or a much better point of accumulation across the major indices. There's just no other way to cut it. I know it might seem like I'm being kind of negative or maybe overtly fearful, but guys, this is just what price is telling us here. And I think what I'm saying here in regards to there being like a kind of correction of some sort down to 200 week, or just kind of this nice healthy pullback in markets to kind of be prepared for, I think that's a pretty moderate ask. In fact, I think it's grounded in a pretty good amount of reality, and it's based on the price action, all the things that we can see here. But beyond that, I want you guys to again come back to that S&P 500 chart, right? And I want you to think about what this means if we're entering into a lost decade. Right? I just want to, just take a look here at the chart here. I want you guys to consider what that means if we go for a 40-50% pullback in all asset valuations. Like, a good steady 10-20% pullback in housing prices, a 50% correction in equities. What's that going to mean for Bitcoin? What's it going to mean for altcoins that are, again, the most risk on? In the case of altcoins, I think baseless, no fundamentals, not many killer applications out there. If you've got your entire net worth in these things because someone told you to go out and buy them, it might be time to reassess that. All right? I just want you guys to keep that in mind here. There can obviously be great trade opportunities, and if you have good risk management on those positions and stuff, that's an entirely different story. If you want to try to catch a bottom here and you have maybe for example a 5 or 10% stop, but your take profit could be 50% or 100%, you've got a really great risk reward ratio and you can afford to lose that, that's okay. I'm talking about those of you out there who've been told to just blindly DCA, hodl into the market, nothing go wrong, number goes up and to the right, Bitcoin doesn't care, it's going to keep going up. It does matter, guys. Bitcoin is nowhere near as lucrative as it was back a couple years ago. And I only say that to you because there's not enough people telling you that, because they want you to be passively optimistic about the market, and not ask the tough questions. If you don't come in with a trading strategy in this market, it is going to eat you alive. Case in point, I want you guys to just keep that in mind. You got to be smart here about how you approach things. We've got to be much more nimble here in this environment, because over the long term, while we understand the long-term trend, like over our lifetimes, is that perhaps this comes back up, it's going to be a gloomy couple years or a year or two, but we charter back higher. We can follow that principle, and that's a great thing to keep in mind, to buy into really dramatic levels of fear and find generational buying opportunities. But until those arrive, right now we are at generational highs. We are still just a couple percentage points away from those all-time highs in the stock market. So keep that in mind here, that there are these major drawdowns. There are these periods of time where assets will not move up, and they may not be your best position to be in. So I rambled on a good amount here today, guys. There's a couple things I want to speak to you guys about. First off, if you haven't already, I definitely highly recommend, if you guys can stick with me here, because I got some important stuff to share. The first thing I want to say is that if you guys haven't already, I definitely recommend you guys check out some of the other content we're putting out, some of the videos that are put out by our creator Ryan here. He's doing a lot of really great evergreen content on everything going on in crypto, some of the major developments, just some of the major news headlines, breaking down macro events as well. I also recommend you guys check out Paul. He's also one of our traders here on this channel, as well as Cassie. Both of them have been doing phenomenal analysis. They offer their own fresh perspectives. And yes, they're not always going to align 100% with me, which I think is actually really great. They're more trading on shorter term time frames, doing either kind of shorter term trading, swing trading. And they have a really great process in place that allows you to make these trades at a much lower risk profile than what a lot of people out there might be promoting. So at the end of the day, I really would ask that you guys check them out, see their content, see if you like it, and learn about their process, because I think those are the kind of strategies that are going to help you to navigate what's going on in this environment. But the reason I bring this to you guys is that there's a little bit of a small update. It's not the biggest, I think, deal in the world, but I'm going to be stepping back a little bit from doing the updates here on a weekly basis here in this channel. I'm going to be probably coming on, every 2 to 4 weeks here. So when you guys see me on this channel, you'll know that it's something really important. It's really a time where we've got to focus. We got to talk about some of the big updates or changes. We'll have a lot of great stuff to talk about. But I'm basically getting to the point where I want to step back a little bit from YouTube. I've been doing this for the last couple of years. It's coming up. It's crazy. Couple months, it'll be 8 years that I've been doing DataDash. So I don't want to say that this is some absolute farewell. I'm obviously going to come back on the channel. And one thing I want to let you guys know about is that I am also still writing the Dash report. So if you guys really resonate with my content, if you've been watching me all these years, maybe you're a new viewer to the channel or someone who's been around for a long time, and you're also resonating a lot with what I'm talking about here in regards to kind of getting a little bit wiser and smarter about how we're going to be approaching markets, because the things that worked for the last 10 years are probably not going to be working, and there's going to be more volatility and chop. It'll be more likely a sideways or downward market. There's still going to be opportunities, but you've got to know where to look for them, and you might have to probably step out of your comfort zone outside of crypto, look at stocks, look at commodities like gold and silver, which have been trending solid over the last couple of months, far outpacing the S&P 500 in crypto. We are going to be finding these opportunities, and I'm going to be doing my best to know when it's time to be in the market and when it's time to be out, at least how I'm going about trading these. So you guys get our monthly newsletter that drops around the first of each month. which is over 35 pages of different types of subject matter in regards to crypto stocks, commodities, and Forex. You guys will get access to our discussion group with hundreds of DataDash members, some of our best members in the community. And along with that as well, you'll get access towards our trade alerts as well as exclusive market updates and our mid-month webinar where you guys can ask me questions. We dive into the charts. But I just wanted to say that if you guys want to support me, and free content we put out here, you guys can always consider signing up on a monthly basis. You can save, of course, 20% by signing up on an annualized basis. I'm going to be continuing to do this for the foreseeable future. But I just wanted to let you guys know that that's where you can really kind of get more active analysis from me in regards to my thoughts on markets, some more content than what I'll probably be contributing here to the DataDash channel. It's been my long-term goal to make DataDash this kind of crypto media platform where we can get more voices than just me. And I think that that's really healthy in the long term. For those of you who are looking for that next leg up on trading and who want to be able to navigate this changing environment in crypto, Cassie and Paul are prepared for that. They've been trading in this space for a while. They've evolved their trading strategy to be profitable in this environment. And Ryan has been putting out some phenomenal research content and breaking news content on this channel. So I think the three of them are going to really lead forward in creating some great stuff here. And of course, I'll always still come on from time to time as well, as I mentioned here. I'm not going to be gone forever or anything like that. But I do want to say here, without making a big drum up of it and stuff, after doing it for so many years, on an active basis, nonstop, which is pretty wild to think about. I just want to say thank you to you guys. I really mean that from the bottom of my heart. The amount of support you guys have shown, the memories I've had traveling across the world, going to different conferences, and we had our meetups as well for the DataDash community. It has just been beyond my wildest dreams. I've done YouTube channels of different sorts since 2007. Most of them never worked out. It was just something I did for fun, and I never would have really imagined that I'd be able to do YouTube for a career, to do this for a long time, and that people most importantly would want to hear me talk about financial markets. That has been such a huge blessing beyond comprehension. And while I'm at this point where I feel like I'm kind of ready for a new chapter, and I don't know if it's going to be in crypto and finance, I feel it's going to be something different than that. I do want to say that for me, this is still an incredibly exciting field. And I'm going to continue to contribute in the Dash Report. I'm going to continue to come here on the channel from time to time. But I think it's time for me to kind of pass the guard, so to speak, and bring it to a group of people who I feel can deliver on that vision. So I just wanted to say again to all of you, for all the years, thank you so much for your kind support. And I'll continue to see you guys right back here on DataDash on every video every once in a while. And outside of this, well, you guys can again consider checking out the dashboard down below. But until the next video, guys, I'll see you all in the next one. Stay safe, trade smart, and I'll see you guys in the next video. Take care, everyone. Oh, I should probably throw in a nice closing snap.